Equity News on Equity Access, your cross-section of the stock markets and of developments of the Zimbabwean economy. A beautiful evening it is to you. I'm Ibn Mabunda. Let's get started. Our news tonight, the Global Renaissance Investments Corporation today held a Zimbabwe Infrastructure Summit in the capital, which was attended by members or leaders from the government as well as from the private sector. The Equity Access team engaged the Deputy Minister for Transport and Infrastructure Development, Honorable Fortune Chasi, for a conversation on the transport system of Zimbabwe from rail to road and even to air. We discussed the operations of AirZimbabwe in light of the acquisition of new aircraft, which is expected to touch base soon with $70 million. Let's have a listen.
The planes acquired under the Zim Airways structure were appropriated to AirZimbabwe. And so we have an administrator that is in situ at AirZimbabwe. The first point of interest and concern to government is when the administrator exists, we intend to have men and women of integrity on the board of that. We think that's a very key part of the management of the airline, and then of course they will then have to deal with executive issues and the appointments, and we'll be very clear with them that we expect highly qualified and professional people to be in management at AirZimbabwe.
We then also discussed the operations of National Railways of Zimbabwe in lieu of its engagement with a diaspora investor, which is Transnet. Again, let's have a listen.
Discussions have been ongoing. We have just given them a 6-month extension to ensure that we get to financial closure. With the BNC that took place over the past few days and the agreements that government were entered into, which reflect the willingness of our South African counterparts to ensure the fulfillment of the framework agreement that we concluded. We are very hopeful that after within the 6 months we'll be able to conclude the deal.
Meanwhile, Zimbabwe Stock Exchange listed Mashonaland Holdings today signed a defining deal estimated to be worth over $15 million with a Chinese investor known as Touch Road International in the capital. Well, on the table is a building that is owned by Mashonaland Holdings, which they acquired from Anglo-American way back in 2003. Now, on the table now is to actually convert this building, which has been used as commercial property, for its conversion into a hotel in that sense. The building will be refurbished into a world-class 5-star hotel with 80 rooms, high-end technology, interesting security features, and to make it more fascinating, even a helipad. Let's have a look.
First time I saw that building, I like it. As the MD mentioned, it's a 61 years old building. It's very beautiful building. And now we will try to make it to be a very beautiful young lady. Yes, a 61 years old young lady. Yeah. It will be a very international standard, 5-star hotel, including 80 rooms and very big conference rooms with high security systems. And inside you also will find different restaurants, gyms, and you will find other equipment, and you will find boutique shops. So our target is to allow our guests stay in this hotel very convenient. They can stay there, work there, entertainment there, and they will enjoy.
Group Chair Ron also let us in on the strategy of the corporation going forward. Again, let's have a look.
Our strategy is to diversify.
Right.
Currently we are heavy in office space. What we would like to do is to diversify into shopping malls. We want to diversify into hotels. We want to diversify into residential so that you are covered in all areas of real estate.
Meanwhile, Fidelity Printers has released gold figures for the month of February, indicating a 20% increase to 2.1 tons on a month-to-month basis. While the growth is desirable, this remains below the monthly average of 2.7 tons recorded in the year 2018. Let's just have a quick look at the stats, where it is that we're coming from and how it is that we have actually gotten ourselves to this place. January of 2018 was 2.6 tons, February 2.0 tons. Compare that to how we have fed, that's January 1.8 tons as well as 2.1 tons. In total, that's 4.6 tons there in 2018 against 3.9 tons recorded in the year 2019 in that regard. As you can see that we actually had interesting figures at August, which was our peak for last year. We recorded 3.9 tons. Well, after that, that was September, 3.5 tons. Then in October, when there was a monetary policy pronouncement as well as the introduction of the 2% tax, that then saw a decline in the figures as there were issues to do with forex retention, as miners were not satisfied with the amount that they were actually receiving, and it is suspected that there should have been side marketing as well as other issues in that bracket. Well, but why is that important? Gold is Zimbabwe's largest forex earner, earning Zimbabwe forex worth $1.2 billion in the year 2018. Well, government has pinned hopes of growth in as far as Zimbabwe is concerned, with particular attention to forex earning. Well, setting a target of 40 tons for 2018, coming from 33.2 tons in 2018 in that sense. But if we're just to have a historic perspective as to where Zimbabwe is actually coming from, where the gold figures are concerned, 2000 we had 22 tons, 2004 21.3 tons, 2007 7.7 tons. 2008, things got so bad we only recorded 3.6 tons. Now, what this graph actually shows is that there seems to be a very strong correlation between economic fundamentals in the country where currency is concerned vis-a-vis the gold deliveries that we have recorded as a nation. So in 2008, when things were messed up currency-wise, hyperinflation, hitting the world records in that regard, that's when we had very low figures. And so as things improved with government of national unity, confidence in the local sector, currency, US dollar coming in, there has actually been an upward trajectory. Now, moving on, getting back to this graph, we also see that sort of trend, positive figures in that regard. Things get bad here in October, and so we record 2.0. November, we also have a slump in that sense. And now we're beginning to see a slight improvement between January and February, which reflects revision from government where forex retention issues are concerned. Of note is the fact that government has set a target of 100 tons for 2023 in line with the 2030 target of transforming Zimbabwe into a middle income economy. However, the prevailing foreign currency shortages and inflation as well as price distortions are standing in the way of government plans. Post the monetary policy statement by Dr. John Mangunjika on the 20th of February, the small-scale miners, who are the largest contributors in that sense, if you just have a quick look, you'd realize that the small-scale miners that you have at the bottom here are the largest contributors to our figures. So post that MPS, they lobbied for their forex retention to be actually traded at 1s to 3.5 as opposed to the interbank rate of 1s to 2.5. Well, that did not make enough sense to the central bank governor, who only went as far as increasing their forex retention from 55 to 70%. As it stands, the small-scale miners are dissatisfied and they are requesting for that adjustment to actually be made. During a meeting with small-scale miners last month, Deputy Minister Polite Kambamura said that, well, that adjustment would not be made in the interim, but it is something that they're actually looking into. Meanwhile, in a mind-boggling revelation, Caledonia CFO Mark Learmonth says not all gold that is being delivered to Fidelity Printers is actually being mined in Zimbabwe. Let's have a listen.
I think what's happening in practice is that people around Zimbabwe saw that you got this mechanism whereby you could get a premium for your gold price in Zim. So I think a lot of gold was being smuggled into the country, was being sold in Zimbabwe, and then the proceeds were being exported back out of the country. So far from boosting foreign exchange reserves, it was actually depleting foreign exchange.
Meanwhile, ZSE listed National Foods today published financials for the half year to 31 December 2018. Who's Nat Foods? Nat Foods is into flour milling, maize milling, stock feeds production, cooking oil, as well as snack manufacture. The corporation is also into contract farming and also runs a logistics service. Well, the revenue scaled 41% to $208 million in that regard, up from $147 million in the previous comparative period. Well, they're coming from a base. Well, if you check out half year 2015, they recorded $167 million, scaling up to 171, and then there's been a decline, and thanks to a lot of developments in the Zimbabwean economy, the likes of command agriculture and the like, treasury bills, and the list being interminable, we've got that figure of $208 million. Also matching that would be a growth in profit after tax from $9 million in 2018, moving right up to $17 million in that very same period. Now, according to the report, the company volumes scaled 18.4% over the comparative period last year as far as stock feeds as well as poultry. The maize milling division also grew 60% due to affordability of maize compared to other starches in that particular sector. Moving on, ZSE listed diversified light manufacturer Innscor Africa Limited today released financials for their half year to 31 December 2018. The group owns Natpack Packaging Company and is also into bread production and is known for its flagship brand Baker's Inn. The group recorded growth in revenue to $489 million, which of course on the graph is recorded as 490 million, rounding off, compared to $305 million recorded in the comparative period, the previous the previous trading season. Matching that is also a growth in profit after tax from $72 million to $192 million. Generally, there has been what seems to be a general increase in the levels of revenue for the corporation from 2015 296 to 2017 $311 million, taking a slight dip to 305 in the ensuing period, and now it's $490 million. For conversation on these and other issues, I'm joined in studio by our resident investment analyst, Anesu Chumbomo. Anesu, good evening and welcome to the show.
Thanks, Eben. How are you doing today?
Won't complain. Should only get better yourself.
That's good. I'm all right myself today.
Awesome. Let's get the ball rolling.
Yes.
Let's start by talking about Mashonaland Holdings. I'm very fascinated about this one.
Mm-hmm.
And a capital injection of an estimated over $15 million, converting this property into a hotel.
Yes.
Well, what's your take on the strategy of the group going forward?
I think it's a good strategy because as of late, Mashonaland Holdings has been having some trouble with their commercial buildings, which had much to do with office space. For instance, this particular building had about an occupancy level of about 20%. So now you'd imagine that they would have such a huge asset that was only bringing in so little money into the company. So with them trying to diversify into a new space, they actually never have had any tourism site buildings. They have much to do with office spaces in CBD. One of their flagship buildings is the ZB Life Towers. So you would find that these guys pretty much deal with office space, and office space has been pretty much expensive, especially with the tightening economic situation in the country. So you would find that some businesses have been actually shipping outside of the CBD and putting themselves in the peripherals of the CBD, or even in the suburbs. So you would find that with that kind of trend happening it was going to put them under a huge threat in terms of their revenue incomes because of low occupancy levels in most of the buildings that they actually deal with. So now with them actually diversifying into tourism now, it's a very good opportunity for them because we are a growing nation in terms of our economy. Even though things do look very bad right now, when the economy starts really booming, we will really start noticing an uptick in terms of our tourism numbers. For 2018, we actually raked in about $1.1 billion in terms of foreign currency earnings via tourism. They actually surpassed the 2.3 million mark for tourists who have flown into the country for 2018 again. So you'll find that these numbers are actually growing, and with that opportunity being there and less accommodation in terms of tourism, it presents itself for the company to actually go into that diversified area of business. Because I mean, there was a mention of the Harare Metropolitan actually only having about 2,731 spaces or rooms in the CBD in terms of for occupancy, in terms of hotels and other areas that people could use for their vacations when they do come in. So the most interesting part then came in when they said, what if we end up holding a conference at the HICC that holds about 4,500 people, and 4,000 of those guests are actually international guests, and yet we only have 2,731. Now, 80 rooms may seem very negligible, but then for the quality type of restaurant, hotel they want to build, they should be getting some pretty good premiums out of that. I do wait to see what it's going to look like. It should be a very positive perspective for them.
Sounds like a very significant facelift for Harare. But well, this is not the first time that we're seeing something of this caliber. Late last year, a Victoria Falls player known as Lala Lodge also engaged on a project that is estimated to be worth about $15 million.
Yes.
So are we likely to see growth in terms of hoteling? Are we likely to see other players also coming into,
Well, yes, I think it should be something that a lot of property companies should really look into. Good thing for Dawn Properties, those guys already have a lot of properties in terms of tourism sites. I mean, you could talk about Crown Plaza, which is pretty much right across the street from the new hotel that should be there at the Charterhouse. I mean, so with tourism growing, it's something that is very critical for most property companies to actually start considering. You look at FML, these guys also sold, it's actually ZPI, my mistake. They sold one of their properties in Harare for them to actually venture into a mall in Victoria Falls, which should expect a huge influx in terms of in terms of tourist numbers going ahead into the future, mainly because of the new international airport that is now situated there, which makes it a little bit more simpler for a lot of tourists to come in to the Victoria Falls area, because you'd find that a lot of tourists were now enjoying the Victoria Falls area by coming via South Africa or Zambia, our neighboring countries, and not actually enjoying the accommodation that could have been there with the little rooms that are there, and also the expensiveness of how we are actually operating in the economy. But then that's a discussion for another day. But then the opportunity is pretty bright for property industry, for them to actually get into tourism sites.
Then moving on to our other story, the gold. Well, we are actually coming from this position here. We've recorded over 4 times, and now that's for the 2 months, January and February. Now, January, February of 2019, we have sort of dipped to 3.9, which is a decline in that sense. What could actually be happening? What are these figures trying to tell us?
All right, we do already know the current issues within that sector that have much to do with foreign currency retention rates, and also the exchange rate that is on the market currently, which is of around about 2.7 as of today. Now, we are talking about a sector that is very heavily dependent on foreign currency, and if these guys are not getting as much foreign currency that they need, they cannot be very much operable. So since about October, where we had the sharp decline, which is where most of the issues really started to come up, you find that Zim also closed some of the operations at that time, and even small-scale miners actually started retracting back. But then some of these small-scale miners are pretty much reported to have been doing some side marketing rather than them actually reducing some of their production numbers, because I mean these guys they actually do live off of actually my gold panning and the like, so they shouldn't really reduce their volumes, but I think they just side marketed, and then coming into
hold on there. What's your take on the revelation that perhaps these figures here, especially on the small scale side, are actually a reflection of gold that is coming in through the borders?
So basically what this Caledonia CEO was talking about was that there seemed to have been a chance in the market for most of these small-scale miners where they could actually go and acquire gold outside of Zimbabwe, which is in Mozambique. I would suppose that it was a cheaper price that they would then smuggle back into the country and then sell it to the RBZ. Now, why would they do that? Because if they were getting it at a cheaper price in Mozambique, they could sell it at a better price here in Zimbabwe, and as well as enjoy the export incentive rate that was being provided at that time. So with those two factors in play, they would have needed to actually push up their volumes. So they probably would go and buy their gold in Mozambique and then smuggle it in Zimbabwe, and then bring in probably these pretty huge numbers that we're seeing around about the mid-year of 2018, where they were dealing around 2.6, 2.5, and up to 3, which was pretty much their highest level in that year. So after that, it started coming off when foreign currency issues then became a little bit more of a bitey issue as time went on, and then their numbers still started to decline for them to actually access foreign currency. It became a little bit more harder, and now we see the numbers coming off. Then came the issues to do with the foreign currency retention rate, them lobbying for them to actually push it up from the 55% that they had been getting up to the 70s, but then that number hasn't been pushed only up until as recently as probably in January. There has been talk that retention rate has been increased. There's still some reports to confirm that, but then that was the deal on the table, which I would assume has pretty much caused for them to start pushing up their numbers again in January and in February, because you do realize that in December it was an uptick from November, which was pretty much their lowest throughout the whole year, and then actually started coming up. So the small scale miners pretty much seem to have an incentive that they are being enticed by, that has caused them to actually push their numbers up to about 1.5%, which is a 50% increment right there. But then the worrying part for me around the gold miners now are the primary scale miners. Why? Because these guys have actually reached their lowest in 24 months, which is about which is about half a ton.
That's worrying.
You see, so with them reaching around about 0.6 of a ton, it is very, very worrying, because I would like to think that these guys do pay a huge amount of taxes to the government, and if their numbers really come down like that, then that means we've got an issue in terms of government revenue coming in from these guys. Also, the gold numbers would pretty much come off. Yes, it's an increment of about 20% from 1.8 to 2.1, but then that increment is nothing to really go by if we're going to go throughout the whole year, because we do really need to reach the 40 tons that the government has actually put in place. And now, if we are producing at about 2.1, which is pretty much less, the average, which is pretty much less as the same 2 months in the prior year, it can be worrying as we go forward if they continue on that average, not knowing how soon or if that deal between the government and small-scale miners was actually set out. We are yet to know the finer details around that. But then, if that deal was agreed upon and the government is actually giving them 70%, these numbers may continue to go up, and they may begin again to smuggle in gold from Mozambique.
Should they go up, I'm certain that we won't reach that 33.2 that we reached in the last season.
Yeah, it's very much possible because of how the primary scale miners are not very much enticed by what the government has been doing currently.
Let's talk about National Foods. They're releasing their financial statements, and according to the financials there, their profit after tax growing to $17 million from 9, which is almost double what they've actually produced. How relevant are these figures in telling the story of the performance of the company?
Well, that's about 77% increment right there. We could talk about them actually enjoying a huge volume growth in most of their business units. One business unit that was very much of interest for me was their maize section, where they actually enjoyed about a 60% growth in their sales around maize. Now, that was mainly because of how the farming season for the country was pretty much on a low in the 2017-18 farming season, where those numbers really came off. And now, as these guys would have extra maize that they would have acquired from somewhere else, they now had the opportunity to actually sell it off to the government so that we could actually still meet the national demand of maize. So one huge reason is their volumes going up. Yes, they did complain a little bit about their foreign currency issues, where they did see a little bit of a slump in around about their pure oil business. I mean that the pure oil business is pretty much a huge issue of contention in that industry, because you do know that Surface Walmart had to actually close down their operations because of a lack of foreign currency, and them not being very much operable because of the lack of foreign currency. So this was pretty much expected of their pure oil business. Other areas of their business where in their feeds business, where they actually enjoyed an increment. Why? Because in the previous year there was an issue much to do with aviation influenza, which killed off a lot of birds. So now with birds having come off in that year, that meant that demand for their feeds had to also come off. But then as of late, the resuscitation from that era has pretty much improved their volumes in that regard, in terms of their volumes for their feeds. So pretty much these guys have been enjoying a huge volume uptick. We are still yet to see how their volumes still perform coming the second half of their financial year, because of how consumer spending power has been pretty much eradicated by the 2.5 exchange rate that was put in place by the MPS, by John Mangujga when he presented the MPS.
I'll need us to come back to these financials. Mm-hmm. For now, let's talk about Innscor. They're also releasing the financial results for the half-year period to 31 December 2018. There is a growth in revenue, growth in profit after tax. Mm-hmm. In fact, their revenue has, the profit after tax position has actually sort of doubled in that regard. Mm-hmm. Again, how relevant are these figures in telling the story of the performance of the corporation?
Well, the corporation has had a very good set of top brass. I mean, these guys have done very, very good in terms of acquisition of businesses, which is one of the reasons that these guys have actually had a huge uptick in their revenues and profits. These acquisitions have brought in companies like your Pro Dairy, your Pro Brand, other Pro Brand brands that are within that company. You would find that with those acquisitions, that restructuring has caused for their revenues to come up, as well as some volume upticks that they enjoyed. I mean, these guys have had a lot of good fortune in terms of them actually acquiring businesses that are worthwhile. I mean, if you look back in 2015, it would seem as if these guys were not doing very well back then, but then that revenue number actually had come off mainly because of how they had unbundled some of their businesses I mean, you could talk of your Exia, your Simbisa, which was a part of Innscor before they got unbundled to be by themselves as separate entities. So that revenue number naturally would come off. It was actually about a 5 to 10% decline from the previous year. And then coming into 2016, then they started realizing some upticks where they were coming up from 301, 311, and then a slight decline in 305, much to do with Ivans, where they had actually suffered from that aviation influenza that we talked about earlier when we spoke about Nat Foods, which is actually a spin-off from Innscor. So these guys have had a very good run of a good top brass that has managed the business in a very good way, that they've kept on growing their industry, their business in different areas of the industry of Zimbabwe.
Now that's 490 million.
Mm-hmm.
That's 208 million.
Mm-hmm.
Right. Against what we have seen Old Mutual do, they have actually discounted the figures for the operation of the corporation for the 3 months from October right up until December, factoring in changes on the monetary policy statement. But these have gone on to publish the financials on the pretext of the then existing parity between the bond and the RTGS. What is your take where that is concerned?
That's a very good question, even. But then, for some companies in Zimbabwe, like you mentioned, Old Mutual, these guys are of the view that as and when the RBZ governor John Mangujka actually separated FCA accounts from local accounts, that then showed them an acceptance of how the US dollar and the local surrogate currency were not at parity. So now such companies are taking a prudential step as to actually discounting their tradings from that time of October through to December. Now, then other companies like your Nat Foods and your Innscor are of the view that the government at that time still did maintain that the US dollar and local surrogate currency were still at parity. We still had some parity there. So with the government statement actually saying that they still have a 1:1 rate, then that meant they should still be accounting for their trades at that rate. Now the PAAB, which is a board for accountants, is yet to still make a statement as to how the dealings of October through to December are going to be dealt with in terms of how the government had actually separated nostral accounts from local accounts, and also how the government was still also maintaining the statement that the US dollar and the local surrogate currency were still at parity. So pretty much it's still a wait and see issue in terms of how most companies are going to do according to what the PAAB is going to actually say.
And so please take us through the stock market.
Well, it was very much of a better day today in the week, as since Monday we have been pretty much in the red. Now today we have some better colors up on the board, with all share index adding about 0.99%, while the industrial index added about 1%, for both of these indices to actually settle at 134.14 points and 447.37 points. Now the minings index was stable for the day. Top 10 index added about 1.24%, courtesy of an Econet jump of 9.36%, for it to settle at 124.14 cents. Now Old Mutual has pretty much extended on its weekly on its gains from the past two sessions, as it has been on an uptick. Padenga still in the green on a year-to-date basis. If we just have a look at our 5-day trend here, like I mentioned, today was a better day, so you'd find that your graphical trends have an uptick pretty much on that last day here, which then slimmed down our 5-day deficit to about 5.49% for the all-share index. The industrial index is down 5.5%, while the top 10 index, which was accounted that pretty much dragged down the stock exchange for the greater good of the past couple of weeks, is down 7.76%. while the miners index is down 2.71%. Now, looking at our rises and fallers, we had about 17 counters that traded on the stock market today, down from 18 in the previous day. We had about 6 rises and about 7 laggards in the party today, where you would find that a couple of bears have come back into the game. Now, a couple of bulls actually. Now, amongst the bulls, Econet was leading the pack. We already talked about that. Willdale added about 6.7% for it to settle at 101.9 cents. That's pretty much a penny stock. These guys deal in brick manufacturing. TSL added about 1.77% for it to settle at 71.25 cents. While Old Mutual, as we spoke about already, in then banking stock, CBZ added about 0.29%. But among the 7 laggards, Zimbabwe was down 18.41%. Mikos was down about 5.27%. Just to go through some of the fallers, Sidco and Masimba. Now Delta, which recently mentioned that they are going into full capacity and actually have also increased their wholesale prices in terms of their beers, has come off 0.13%. Now, before we close off the show, we just look at our forex market. Like I mentioned yesterday, it looks as if the interbank rate is trying to converge with the parallel market, as it has actually come up another percentage point for it to be trading at about 2.71 times, where the parallel market was pretty much almost stable on an average mid-rate level of about 3.6 times. Well, that's about it for me and the stock market and markets.
Interesting trend there, so thank you very much for the insights. Thank you, viewers, for watching. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website www.equityaccess.net. Thank you and good evening.